Yes, sir. It's your boy B Hayes. We back with another one, guys. So U.S. stocks rose despite negative GDP data, guys. In this video, I'm gonna share with you guys exactly why I believe that's happening. And if you already been following the channel, you pretty much already got a conclusion of what I'm about to say. So these for the new people that's wondering, what's going on in the market. How is the market having this reaction, the opposite reaction of what many would be expecting? So let's go ahead and take a look at it, guys. So as we know, I've been calling the bullish market for a while now, saying we will have a bull run within this bear market because this bearish market isn't fully over yet. But before we take our next aggressive leg down with the overall stock market and the index as well as Bitcoin, before it takes its next aggressive move to the downside, it's going to cause a lot of commotion, a lot of chaos. Before it does that, it's going to take a huge move to the upside just to mess with you even more up in there in the head. Have you thinking, oh, is the market reversing? Should I need to put in everything now? And as you buy, you don't have a plan to get out when it peaks, and then it crashes and you lose way more money than you did the first time when it came down because you think the market is ready to recover. But in actuality, it's just a bull trap, but a big bull trap. I'm expecting a spike, and I'm expecting a good spike to make lots of money on the way up, sell out, and then rinse and repeat, guys. So let's go ahead and take a look at it, guys, see exactly what's going on. We know stocks rose Thursday as earnings seasons continue and following data showing the U.S. economy contracted for a second consecutive quarter. So, guys, stocks moved higher today. I told you guys I was expecting for the stocks to have a crazy spike on the day. If we wouldn't have took that diving the way we did after opening up, the market going crazy to the upside, and then if we wouldn't have took that nosedive following right behind it, we would have been up tremendously today, and it would have failed and played right over into my hands as I was expecting it to, guys. But like I told you guys, falling into what had happened today was yesterday, before the Feds hiked interest rates by 75 basis points, we seen an uptrend, and before it was reported and after it was reported, we seen a continuation of the uptrend. And then this morning, we seen a bat out of hell spike for it to come right back down, tumbling down. And the reason they want to do that, it's like I told you, the Feds is losing power, they losing conviction, they losing their steam, their ability to bring the market down further because they got a 99% conviction rate. Whatever they say goes. But whenever you bring something down to its lowest points, now you're losing control. You just can't bring it down even further. You have to let it rise a little bit and then take control once it rises and bring it down from there to make it seem as if you're still in power. But in actuality, we know you're losing that steam, guys, because once something is brought down to the bottom floor, there's nowhere else you can do to it. It ain't nothing else. There ain't nowhere else you can take it unless you kill it dead. So anyways, guys, and I don't believe the stock market is going to die. Meaning I don't believe these stocks is coming down or came down and going to stay down forever. Nah, the stock market ain't dead. It's never going to die. So with that being said, the Feds lost their steam. They lost their power in order to control the market at this pivot point. So you already know, guys, like I say, I am expecting for a nice spike within the overall market. You definitely want to be prepared to capitalize off the moves that's about to happen. And we steady talking about some of the stocks that's going to make the biggest moves that you need to be on alert for. And as we could see, power hour has came. I told you guys earlier, with confidence as the market started to pull back from the morning bull run. Basically, once it started to pull back, I told you guys with confidence that we would pop right back up. It was going to pop back up, and we didn't pop up as much as I thought we would. We did reach 1472. Now here, power hour, we starting to see some traction, trading at 1456. But like I said, guys, it won't be long because it's not going to take what it took the first time for AMC to get back in that $17-18 range. All it would take for us to break $15.66 before we could get to that level. So you already know what to do. I love you guys. We out, and God bless you. We go.